Our group will be analyzing the Australian dollar against European euro exchange rate for the next 3 till 6 months. We're presenting 5 contents supporting our analysis, which we will explain the background of each currency exchange rate, the cross effect of the currency, and also our conclusion. Here, as you can see, is a graph showing the exchange rate of Australian dollar, which is weaker against the European euro from April 2017 to 2018. Although job availability in Australia is rising, it is still some way from what could be considered as full employment. This low unemployment rate is not leading to higher wages, because there is still some excess capacity in the labor market with underemployment still elevated. Consumer and business confidence remain unchanged, which increases their saving while resulting a slowdown in Australian economy and weaken the currency. A lift in a wage growth is likely to be necessary for inflation to average around the midpoint of 2 till 3% medium-term inflation target. According to Bloomberg Economics, European Federal Reserve raised the interest 3 times rate, which attract investment from other countries outside the European Union. This will lead to a notable increase in the demand and the value of the European euro currency. As higher rates make investing in treasuries, dollar-denominated assets more attractive, capital floods out of other countries, particularly risky emerging markets. The result is that euro currency gain against other currency, which can have profound implications for trade and in a thoroughly trade-skeptical environment. And in conclusion, that's the reason Australian dollar is weaker against European euro.
Australia is well known as one of the biggest supplier of gold and steels. Thus, the price of metal is definitely play a significant role in Australian economy. Regrettably, according to poundsterlinglife.com, price of Australian metal are currently declining. The graph below shows the statistical data of metal price. The fall of price is due to the appearance of new suppliers and they are crowding the market with the cheaper price. Meanwhile, the demand of metal is remain constant. Australia have no choice other than lower the metal price. This fact will make the net export of metal declining. Following that, the demand of Australian dollar will eventually weaken. Therefore, Australian dollar will depreciate in foreign exchange market. Yet, on the 8th of March 2018, Australia and 10 other countries signed an agreement called Comprehensive and Progressive Agreement for Trans-Pacific Partnership, also known as TPP-11. This agreement will eventually eliminate 98% of tariffs in the marketplace between the 11 countries, according to the Guardian report. The ease in the market trading will lead to the increase in net export in Australia, due to the accessibility and cheaper price of goods and services from Australia. Overseas consumer demand over Australian goods will also increase. Moreover, investment from outside and also inside Australia will definitely increase as the business confidence increase. Therefore, the demand of Australian dollar is expectedly increased due to the higher growth rate inside and outside Australia. This agreement will counterpower the decline on demand of net export for metal and make Australian dollar position stronger in the foreign exchange market. Meanwhile, the unemployment rate in European Union country is declining. Based on Eurostat shows in the blue curve on the graph, the unemployment rate touches its lowest point since 2008. Therefore, both consumer and business confidence will increase, and the GDP will follow at the steady rising point over time. Demand of euro will increase, which will result in stronger position of euro in foreign exchange market. Unfortunately, The positive impact due to the declining motion of unemployment rate is not strong enough to help European Union from the loss which countries experienced because of Brexit, also known as Britain exit. According to Bloomberg Economics, European Union is facing greater loss after losing UK. When Brexit occurs, there are humongous number of business agreements getting postponed or even cancelled. As there will be a new regulation apply, right now the business confidence is also declining. People or consumer are afraid of the future and they will choose to save more over spending their money. Investors from overseas countries are also afraid to invest in the European Union, as one of the biggest contributors in European Union is leaving the Union. As the supply of money in the market remains constant, where the demand is practically declined, euro is weaker and will depreciate its value in the foreign exchange market.
To move on, I will bring you to an economic relation between Australia and European Union. According to the Department of Foreign Affairs and Trade of Australia, there is a prospective free trade agreement negotiations between Australia and European Union with regards to a comprehensive and high quality of free trade agreement. The department stated that European Union is Australia's largest source of foreign investment and second largest trading partner. As an evidence, total two-way merchandise and service trade between two parties was worth $95.6 billion in 2015. Therefore, by signing this agreement, there are some key interests and benefits Australia could expect. First, a stronger economic relation between two parties will occur by keeping the agreement supportive to ensure that the trade and investment relationship reaches its full potential. Second, because this free trade agreement could expand service linkages and investment ties, the consumer and business confidence in two economies will strongly increase. Moreover, the free trade agreement could enhance regulatory cooperation in specific sectors of interest to business. As a consequence of positive flows of consumer and business confidence, a higher economic growth rate can be forecasted. Lastly, based on the nature of economy, a higher economic growth rate will lead to growing demand for both Australian dollar and euro. On the basis of all the information we have gone through, here we are able to predict that Australian dollar will relatively appreciate against any other currencies, while euro will relatively depreciate against any other currencies. From this initial prediction we have made, our final prediction for the exchange rate of Australian dollar over euro is, despite the current negative exchange rate of Australian dollar over euro, the Australian dollar will bounce back again thanks to the TPP-11 and free trade agreement with European Union. As a result, the Australian dollar will appreciate against euro in next 3 to 6 months of time period. And this is the end of our presentation with the references for more details. Thank you for your concentration.